Cool. All right. Well, thank you everyone for joining us for the second webinar in the RemitONE BitSpark blockchain series. Today we've got some interesting topics that we'll get through. But just a reminder that this is the second one in the series, and we'll be doing one again, next week and the week after as well. All on sort of different topics related to the blockchain cryptocurrency and what it actually means to remittance companies. And we're most welcome to hear your questions throughout the presentation today. Just put it in chat. As when I'm zoomed into the screen and going through the presentation, I won't be able to see chat, but we'll do some breaks here and there with the different slides and get to some of your questions as well, like we did last time. So I mean, that's sort of it for me for an intro. Osama, did you want to add anything?
No, I think you absolutely covered it there. And then just hopefully as we go along, just jump in here and there if I feel anything needs to be added. No, but please go ahead. It's fantastic.
No worries. So can everybody see my screen?
Can indeed. Yep.
Okay, excellent. So just a little, we'll start at the agenda. I think the main message for today is we want to have a look at last session was more of an introduction, right? It was sort of the overview of how things work. We got stuck into a little bit about functionally how it works. We got stuck into cryptocurrencies and what they are and how they work. And I realize some people may not have been present at the first one, yet they may be present at today's. So we'll quickly go over a little bit of what we looked at last time. But the main sort of focus for today's session was we want to have a look at some of these different protocols and these companies that are building these sort of blockchain settlement systems. So you may have heard of some of these people like Ripple and Stellar and so on, and sort of what they're doing in the industry. So we'll get into that as well, and look at some practical examples about how do these protocols how do they work, and what's it all about. So let's get stuck into it. You might remember this picture from last time about what is a blockchain and how does it differ. I think this is an important point to note here, in that essentially everyone is sharing the same ledger. That is the sort of the be all and end all, right? So in a centralized different ledger system, you have one company, they operate this ledger of, let's say, if you know accounting, you've got money coming in on one side and money going out on the other side, and it's all stored in one central ledger, and that's how you run your business. Whereas in the case of a blockchain, everybody has a copy of the ledger and everybody updates the ledger at exactly the same time. So there is no central depository of this ledger, or this oracle of wisdom, and everyone has a copy of the ledger at the same time. So that is really the real thing that we're talking about, and a lot of people call it blockchains or distributed ledgers, DLT, but it all means pretty much the same thing, in that you have a history of transactions, of things happening, events that are recorded on the ledger, and everyone's got a copy of it. So you can keep that in the back of your mind when we're talking about some of these different protocols and companies, because obviously a company is a centralized thing, whereas say a protocol like a Bitcoin or something, there is no company called Bitcoin. And how do they differ as well? So a little bit today I mentioned about protocols. Well, what are we talking about when we mean a protocol? Well, essentially the internet runs on a protocol, telephones run on a protocol, email itself is a protocol. Lots of different technological advances, they all have to have a common way to exchange information. So in the case of phones, if everyone built their own version of what they think a phone should be, nothing would work, because none of the phones would be able to talk to each other. You wouldn't be able to connect to each other. You need some sort of standard that everybody agrees upon in order to move forward and be able to have your system be interoperable with other people's systems. So essentially that's what we mean by a protocol, in that these systems, it's sort of like it's a standard that everyone adheres to. And you know what we've got here is essentially protocols are more about moving data than they are about moving money. So in the case of email, everyone who makes, you know, an email client on your phone or on your computer or whatever it is, you know, everybody ascribes to the standards called email, so that, you know, when you send an email on your phone, it arrives on your computer as well, and vice versa. So, you know, everyone agrees on this common exchange of data. And essentially, when we're talking about payment protocols, you can think of these as essentially an exchange of data. Now, how does this differ to, say, a Bitcoin transaction or something like that? Well, you know, on one level, Bitcoin is an exchange of data, but on another level, a Bitcoin itself has a value. You know, when I send you an email, I'm exchanging data with you, but it doesn't have a value. It doesn't have a set, you know, monetary, you know, cost per email or something like that. You know, that doesn't really exist. It's just free, and we're just exchanging data. Whereas in the case of Bitcoin, there is a cost, and it has a unit of value as well. So it's more than just a data exchange when we're talking about cryptocurrencies. But when we're talking about protocols, there is usually not really a monetary component. So, you know, some of the popular protocols that have been talked about quite a bit are Ripple and Stellar. Now, if you type Ripple into Google, you'll see that Ripple is a company based in I think San Francisco in the US. They've been around for probably 5-6 years. You know, they've been going for quite a long time now in the blockchain scene, and essentially they are a protocol, and their main focus is on banks and, to a lesser extent, money transfer companies as well. But predominantly, a lot of the contracts which Ripple have signed, which you'll see spoken about publicly, are with banks, with central banks, clearinghouses, and so on. And essentially, all of these different banks, these people, they're signing up to use the Ripple ledger. They're signing up to exchange data with Ripple's system, and that's the product which Ripple sells. And you know, you can think of what are some other protocols that we use in the money transfer industry. Well, Swift is one. You know, that Swift is a protocol in and of itself. When we send money overseas, when we send a Swift transaction, we're not sending dollars really. Actually, what's happening behind the scenes is a message is going from your bank to another bank saying, hey, you know, here's some data. Can you debit this account and credit this account? It's just a piece of data, you know, and Swift is the protocol. So Ripple's very much like that. We've also got Stellar here as well. And Stellar is sort of going for more of the money transfer companies rather than, say, the banks. So sort of, you know, more a sort of a level down in terms of, you know, company size and settlement means and all this kind of stuff. So, you know, we'll get into some of the differences between these two different protocols. But essentially, you know, Ripple is looking to be sort of an interbank settlement protocol to replace Swift. Now, you can think of, well, how does Swift come about? Actually, it came about in I think the early 80s. It really sort of came to prominence, and it was really designed for you know, very small exchanges of data. You know, the 80s, you're not exactly exchanging megabytes of data and PDF files of you know, identity documents and KYC and so on. So it wasn't really built for the job of which it is today. However, it still is, Swift still is the predominant money exchange network, the messaging system that banks use globally to send money. But it does cost quite a bit in order to administer this sort of aging infrastructure. And there's not really much data which you can attach to a Swift transaction. It's actually quite limited. So you have all of these different, you know, different sort of traceability mechanisms in Swift which take time. MT103s you may be familiar with, you know, tracing, you know, where a payment has been made from bank A to bank B. It's actually a lot harder than it really should be. And you know, so Swift is a system out there. But what Ripple's trying to do is replace that and just make it, you know, much easier to exchange this data on a single ledger. They have a number of different products: Xcurrent, Xrapid. I'm no expert, but certainly with their products, I think X Rapid is using a token of value to move money, whereas X Current is not. I think that's the distinction there. So when we're talking about, I've got here uses a native token. What do I mean by that? Well, you remember last session we spoke about using Bitcoin as a payment mechanism, and that has a value. So if I buy Bitcoin here in Hong Kong and I send it to the UK, that has some value. So I buy it for a price here and I sell it for a price in the UK. So I am moving a token of value across borders. That's essentially what that is. So the difference is that Ripple's product X Rapid uses a token of value called XRP, and that is it's on a blockchain. It has a value. It's traded publicly and so on. Whereas X Current does not. It is a separate product which essentially is more of a database for excuse me, more of a database for banks to exchange system between each other. But yeah, they've been around for a while and they've got certainly a number of banks signed up to the system. Whereas Stellar is another one of the protocols which is talked about quite a lot in the money transfer industry. These are the main two. There's a couple of others, but it's pretty much these two which are targeting the money transfer MTOs and so on. But Stellar's, as I mentioned, it's not really targeting for banks. It's more of a ledger in which you can exchange IOUs. Now, I've got the word IOU here. What does that mean? Well, essentially, if I have some Hong Kong dollars here in Hong Kong, I can exchange that IOU with you or anybody else in the world. And let's say I send it to you, and you now have an IOU for 100 Hong Kong dollars. And you might live in the UK or wherever you might be in the world. Now, you know that IOU is essentially me saying to you, look, I'm good for $100 Hong Kong if you exchange this IOU with me. So, if I give you this IOU for 100 and you take it and you do whatever you want with it, you know that at the end of the day, you can come back to me and go, can I have my $100, please? And then I will be able to provide that. So essentially, you can imagine that if a lot of these money transfer companies have their own IOUs, then essentially they can trade those IOUs between each other. And that's what Stellar's all about, is that you have an MTO in one part of the world who has an IOU, let's say, in Philippines pesos, and he wants to trade it with another MTO in another part of the world, that might be British pounds. And these two MTOs, maybe they have to settle payments between each other. Instead of sending a SWIFT transaction between each other, they can also exchange the IOUs as a means of payment. So it's more of tracking payments that are owed between different parties, much like net settlement, much like a lot of what goes on in a less sophisticated manner today. IOUs is nothing new. But having a system to be able to trace it end to end is really something new. And having a common system which everyone can look at, and a common ledger which everyone can look at and go, yes, I can definitely see that. I can prove that you've sent that transaction to me. I can see that you've sent those IOUs to me, and everybody can agree to that. One interesting thing of note was something that's often overlooked is we deal a lot with money transfer companies, and often there's always the conversation which happens about, oh yeah, I've sent the transaction, I've paid it, it was done at 11 a.m. It should be in your account right now. And then you go and look at the account and it's not. And it depends on their bank, it depends on your bank, it often depends on a bank in the middle that's routing the payments between each other. Sometimes that can take days in order to actually clear. So being able to trace a transaction very easily is an often overlooked but very important thing. And if we can both look at the ledger and go, well, I can see that that payment has been made, then it makes it a lot easier to be able to trace that. So that's some of the core differences to Ripple and Stellar. Before I move on, is there any questions so far? We've got these two examples of different ledgers. They are different systems. you know, and they are used in the money transfer industry. But another important thing is settlement, right? So, well, what do we mean by settlement? Well, if I exchange an IOU with you and I say, look, I'm going to give you these 100 Hong Kong dollar IOUs, and you can do what you want with them, but at the end of the day, you know that I'm good for the 100 Hong Kong dollars, and you can come back to me and I will give you that money. Now, the question is, well, how do I give you that money? And that's what we mean by settlement, because we can exchange IOUs all day. But at the end of the day, how does the money actually get from one location to the other? You know, just saying that I owe you something or you owe me something doesn't really help me when I'm the one paying out the cash at one end, or you're the one paying out the cash at the other end. At the end of the day, how are you going to get the cash again to actually go and, you know, top up your account, or you know, be able to pay out tomorrow's transfers? So, you know, there are companies which are able to help solve these settlement problems, and that's what we mean by settlement, is essentially being able to take these IOUs and convert them into real money at the other end, and be able to redeem them for real money at the other end, or to use a token of value. So up here, I know I mentioned here that, you know, both of these systems have a native token. So both of them have a thing which has a value, like a Bitcoin, right? And it's traded all over the world and it has a price. So you know, these systems can exist without this token, but they also have the token as well, you know, and exchange this unit of value. So there is a subtle difference, because if I am exchanging something of value with you, there's no need to settle anymore. So, you know, if I buy a piece of gold in Hong Kong, and then I get on a plane, and then I go to the UK, and then I sell you that piece of gold, now you have it. It's done. Finish. I don't owe you anything anymore. I sold it to you. It's, you know, there's no more I owe you some money, you owe me some money. No, it's we did a transaction. I bought it and then I sold it to you, and that's the end of it. So, you know, this is actual real settlement. Now, the same is true for Bitcoin, or the same is true for Ripple's XRP token, or Stellar's XLM token. You know, they have a price. So, you know, when you settle a transaction using their native token, that transaction is final, and there's no need to later figure out how to settle the IOUs, because when we exchange something which has a value, it's not an IOU. It's a thing which has a value. You buy it and then you sell it, and it's done. Whereas if I give you 100 Hong Kong dollars in my IOUs, well, what are you going to do with it? Are you going to pay somebody out with it? Okay, let's say you pay somebody cash at the other end, but you have this digital thing in your system that says 100 Hong Kong dollar IOUs. That doesn't help you really much. So at the end of the day, you're going to have to come to me and go, can I have my money, please? So, you know, how it does help, though, is enable you to track these payments going back and forth in a transparent and easy to use system, that you can attach a lot of data to every transaction. So, you know, we can exchange IOUs, and often, you know, instead of, oh, you know, I've got my FX broker who I deal with, and I do a transaction with him, you know, over WhatsApp or text message or something like that, which often happens in our industry, as I'm sure many of you are aware. You know, this is a much better system where everything is available on the ledger. You know, I can prove that somebody's paid me, which is a really big thing. But, you know, a lot of these companies can help you with the settlement, whether it's a unit of value, a native token, or whether it is you know, an IOU as well. And essentially what a lot of these companies do is they will take that IOU, and, you know, there is a market established for it. So, you know, they are able to take that IOU and then pay you out in the local currency. So, you know, somebody like a Bloom operates in the Philippines, and they have connected to the Stellar network, and essentially they have a PHP IOU, so a Philippines peso. So essentially, if you know, you can trade these Bloom PHP IOUs, and you know that at the end of the day you can redeem that at Bloom for real PHP. and that has some cost benefits in it as well, and traceability benefits. And a lot of these other companies, AirTM's a really great example of focusing on one corridor and doing it well. AirTM is a company which mainly focuses on the US to Venezuela market and elsewhere in Latin America, and they're doing a very excellent job at servicing that market. CoinsPH is another example of a company in the Philippines, which is conducting sort of remittances via cryptocurrencies. They recently got bought out, I think, by Gojek, much like the Uber of Indonesia. So they're doing very well, and BitPesa as well. Does a lot of interesting cryptocurrency stuff in Africa as well, and we've got Bloom in the Philippines, and of course us, BitSpark in Hong Kong. So there's quite a few of these companies which will be able to take these IOUs from you. And just as a recap as well, I can talk about exchanging money between one location and the other, but for those that weren't at the last meeting, this diagram I think is very helpful in that essentially you have one sender country, you have one recipient country, and it's the usual method in a cryptocurrency remittance is you buy a cryptocurrency like a Bitcoin, and then you sell that cryptocurrency in the other country. So in this diagram, a cash is being deposited in Hong Kong dollars. That cash is being converted to Bitcoin, at some exchange rate, and then Bitcoin is sent to the destination. So in this case, the Philippines. It is being converted to the local currency, so the Philippines peso at, again, some rate. And then, well, now it's sitting in the local currency, right? So now it can be withdrawn. And an interesting point to note is that, in the case of a lot of these companies, they are not expecting the recipient to get, a Bitcoin or a Stellar coin or a Ripple coin or whatever at the other end. In fact, none of them do that. They all connect to the local existing, cash payout methods at the other end, because essentially that's what your customers already know, and it's just easier. It's not a new process that anybody has to learn. So what these companies are doing is they are making the settlement cheaper, more cost effective, maybe getting better rates in different currencies, but they're still paying out via whatever is the methods which everybody uses. So that might be physical cash shops, or it might be banks. So in the case of this transfer here, the bank at the other end in the Philippines, well, they're not dealing with Bitcoin, because you see at the end step here, Bitcoin is converted into fiat. So the Bitcoin is converted into the local currency. Now it's sitting in pesos. So as far as the bank is concerned, there is a peso transaction which is then being paid out to the recipient at the other end via a cash, money transfer shop or store or whatever. So, or to a bank account. So the bank doesn't have to directly deal with these cryptocurrencies, and that's a key point as well, which people often, that are new to this kind of thing would perhaps think that, do these companies have to deal with Bitcoin, and what if the price goes up or down, or what if this happens, what if that happens? Well, that's what these companies solve for. They manage the different prices, but as far as the customer is concerned, the payout is in the local currency. So, take a step back and we can look at, is this actually being used by different countries around the world? Well, I would say that the answer to that is certainly yes. And some of these protocols that we've spoken about, Ripple and Stellar, they have some pretty big traction with a lot of different places around the world. So Ripple's 75 banks, are signed up to use their system. There are government entities, stock exchanges, which are using these protocols. You can imagine if you're a stock exchange and you need to track, essentially a stock exchange is like an IOU exchange. It's like, who owns a stock, this guy or that guy, and this guy sells it to that guy. That's essentially what the stock exchange does. So if you can have a common ledger to be able to exchange those IOUs at, then that certainly makes sense. And there's examples of Korean banks partnering with local, Bitcoin companies for the settlement. People like the IMF or World Bank or these kind of people are always talking about these sort of blockchain settlement systems. NASDAQ is involved in I think doing some trials with Ripple as well. So the reasons why they do that is everyone has their own system, right? And we know this in the money transfer industry. I was at an event, I think, a couple of months back. Maybe I mentioned it last time, but the point was made that there are 3,000 different money transfer systems in the world if you count banking as one. So there are 3,000, and only 3% of them are connected together. So, and that's really why is that? Well, your M-Pesa is not connected to your Bcash, or your Bcash is not connected to Alipay in China, or whatever the local payment mechanism might be in your local country. Often there's these different companies which act as aggregators, and they are the ones who have to manage this. But actually connecting together all of these different payment systems, they're all on their own system. They're all running their own thing. So none of them are connected together. So that is really the point about these protocols, is that if everyone had their own email client, nobody could send emails to each other, and it just wouldn't work. And this is pretty much the case we have when we're sending money around the world now, in that, a lot of these payment systems, it is physically impossible to send from some countries to other countries, merely because none of these companies or different entities in countries share the same ledger. They don't have the same system, and there's trust issues, there's currency issues, there's all sorts of different reasons why. But these protocols can really help solve that and get everyone on the same ledger, the same standard, and then you can exchange payments between people no matter where you happen to be in the world, which you can definitely see would be a cost benefit, because you would not have all of the different intermediaries that you have to operate if you want to send from Kenya to Bangladesh or something like that, right? So
just to add to that as well, George, it even goes slightly deeper than that. I'll give you guys an example. So between UK and USA, there's something called the cable, which is the cable network. It dates back quite a long time. And when people talk about cable, they're talking about the USD GBP rate. But cable itself is a type of network that they use to make payments with. Now, not all banks in the US use the cable network. The main ones do. The UK does. So if you were to send a payment to the US, to a particular obscure bank, it will go through the usual cable network. It will have to go to an intermediary bank first if your beneficiary bank does not subscribe to that network. So what that means is it will go to a nominated intermediary bank. It could be held for compliance. They will take their skim off the top of that, $20 to $40. It could take a few more days before then it's settled eventually to the beneficiary bank at the end. So what George is saying is there's more of a uniform sort of payment method which everyone is using. You will not have these the issues. And again, it's instant. Correct me if I'm wrong, George.
Absolutely, yes, it is instant, and exactly, it is a common mechanism which everyone can use to replace the need for, US EU, has a cable system, and then, this country has a different system, and then that country has a different system, and it just doesn't really make it scalable. So if everyone's on the same protocol and the same standard, it just makes it, way easier. So that's the whole concept and idea. So I mentioned, there was a difference to be made between exchanging an IOU between each other and exchanging something which has a value. And, we can look at the different pros and cons. In terms of using a cryptocurrency for settlement, so that is, something which has a value, like a Bitcoin or something else like that. One of the pros is, well, less capital required for pre-funding. And this is another point which often gets overlooked, but a lot of these companies up here, I know many of them, and they started with hardly anything, including us. So we started with less than 100K in capital between us. So it was like building a money transfer company when you don't have that much capital to back it. As you would know, as a money transfer company, you often have to pre-fund accounts at your various partners, right? So like if you sign a new deal and you know that you've got 100K, 200K of volume going to that partner, Well, what if there's a weekend? That means on a Friday you need to pre-fund even more. And what if that money's not really all used up on a Friday? Or what if there's some leftover? Or what if it takes 3 days to get there because of the bank? Or what if there's some sort of problem in the money getting there and then it doesn't get there by Friday 5 p.m.? Then you have to wait till Monday 9 a.m. till everything opens again to actually get the money there, and you miss out. So, a lot of people have to, tie up a lot of capital in pre-funding money at their partners, and this is money which could be put to a better use. So when you're using a cryptocurrency, essentially I can take 10 Hong Kong dollars and I can buy 10 Hong Kong dollars worth of Bitcoin instantly and then sell it instantly somewhere else. So I don't need, and I can do that on a weekend too. I can do that any 24/7, any time of day or whatever. And that is a really good thing, because that means that it enables companies which perhaps don't have too much capital to pre-fund these balances at all of these different intermediaries. You can get away with doing a lot less in terms of capital outlay, and you can almost do real-time just-in-time financing, meaning that when the money gets to you, you can essentially buy Bitcoin and then sell it somewhere, and then boom, done. You actually didn't need any capital down in order to do that. So that's why we say less or zero capital required for pre-funding. Definitely a pro for using something which is like something which has a value with a cryptocurrency. Well, one of the cons as well can cause issue with banks, and I'm sure Osama can spread some light on that in the UK situation. But certainly when you're talking about using any of these different new systems, or even just as a money transfer company in general, dealing with your bank is a problem, right? And everybody knows this. It's all over the world. It's a global problem. That the industry is definitely having problems with banking. So if you're trying a new system, it could cause issues with the local bank. But one of the things to keep in mind is that with this system, you actually don't need a bank. And that is the core thing here as well. Is we have companies using our system who just don't need banks anymore. They fund in cash. It's converted to cryptocurrencies, and then it's sent overseas. There's no need for a bank in that interaction. They're a licensed company. They do everything as they should. But there's a bank is sort of a not unnecessary requirement in order to convey money overseas. So one thing can be, well, look, you've got to have the right banking relationships. But on the other hand, there is a path that is available, which means that you actually don't need a bank in order to conduct a lot of these transfers, which in many countries around the world, certainly, I was talking maybe last time in Australia, 2016, 75% of money transfer companies lost their bank account. 75%, something like 200 companies, lost it just because the bank said no, we don't want to service that industry anymore. So, what are you going to do if it's that situation? And that's where I think these cryptocurrency, settlement mechanisms can come in handy, for that as well. We've also got, one of the pros, fast and quick cross-border payments. That's another one. As we were mentioning before, if you're doing a cable transfer US to UK, or whether it's different countries, your mileage may vary, and you never really know when the money's going to get there. You can have a best guess, but you never really know. And there can be problems. There can be intermediary banks. So you never really know. Whereas when you're exchanging via this common ledger, this protocol, it's all instant, and you can prove that things happen. So, like I was saying earlier, when somebody pays us, or when I pay somebody else, I can literally provide them the link, online, to be like, look, here is the link. It has been paid. End of story. There's no more debate about that. It's not, let me go and check in my system and this kind of stuff. It's, well, no, look, here's the link. It's on the common ledger. Everyone agrees to it. Here it is. So it really does make things a lot easier when you're sending and receiving payments. Well, another con is the regulatory guidance is haphazard wherever it might be in the world, and we touched on this as well a little bit last time. But essentially, the long and the short of it is that each country has a different interpretation of what cryptocurrency for settlement means, how it's managed. Maybe some countries have some regulations around it and some don't. They say that, look, this is something which is not within our purview. So it really depends on where you might be, but ultimately, as a licensed money transfer company, you are the one that is already doing everything that is necessary anyway. So whether you use a bank or a broker, which or a thing called a cryptocurrency company or whatever, in pretty much all cases, the regulation doesn't stipulate how you must settle. It doesn't actually say that. It doesn't say you must settle by doing X. It doesn't actually matter. What does matter is that you provide, or you get all of the KYC documentation, the AML, and so on. You have the systems to do that. That's what actually matters. But the settlement usually doesn't. But because there is no common standard regulatory guidance around the world, every country pretty much has some sort of money transfer regulation, but certainly in the cryptocurrency space, that is not the case. Some countries do, places like Japan or Mexico recently came out with one. Philippines has one. The UK and the FCA actually came out with a paper recently, which is going to the public, which I'll have to brush up on, or maybe defer to Osama on. But they have some interesting thoughts coming soon, perhaps for sort of blockchain payments. But as of right now, there's no sort of common standard. So that can be a con if you're wanting to engage in it. Another pro, no bank account required. I mentioned that. Very important. And that can't be underscored enough, because you go to conferences all over the world, everyone's talking, what do we do about de-risking? Can we ask the World Bank to do something, or can we do something like that? That's going to take a long time. Whereas the answer is already here. There already are companies which are operating without banks, and they get excellent exchange rates and they can send money around the world. So as far as I'm concerned, I think that problem is solved in terms of de-risking. So that's what I usually say is de-risking is not a problem. It's already been solved. There's a solution. We've also, one of the last cons here, liquidity constraints in some currencies. Now, this is an important one. If I send you a Bitcoin and you're in, I don't know, Sri Lanka or something like that, right? If I send you that Bitcoin, well, you're going to have to sell that for the local currency because you're paying out at the other end, right? And you'll have to sell that Bitcoin for local currency at some rate, which is competitive. Now, what happens if there's no market there? What if there's nobody to sell that to in the local currency? Well, that's one of the cons is liquidity constraints. Now, often in most countries around the world, Bitcoin's traded actively 24/7. You can trade it anywhere, but that doesn't mean that you can do large-scale transactions anywhere. Some countries have more liquidity than others. If I want to send $1 million to one country, that might be very easy via Bitcoin. Whereas in other countries, you're limited to maybe $1,000 before it becomes, that there's not enough liquidity there. So one of the cons is it can really depend on where you are in the world, to impact, what kind of liquidity there is. Now, the good thing is that pretty much all of the key remittance countries around the world, which we're familiar with, have ample liquidity in cryptocurrencies. So, whether that's, in Africa, obviously places like Nigeria is a big one for remittance, Ghana, Kenya, Uganda, these places have lots of cryptocurrency liquidity. And then, in Asia as well, and South America, there's also quite a lot of liquidity for cryptocurrencies in those local currencies. So it's really sort of smaller countries around the world where this is still something to be aware of. So it's worth noting. And the final one here we've got as well is the arbitrage opportunities between currencies. Well, what does that mean? We spoke up here about these different companies and what they do. And they do the trading, right? They buy and sell Bitcoin. So they're giving exchange rates to you. Now, often you can buy Bitcoin at one price and then you can sell it at another price that might be even higher. So, you know, one case, and is a really good example that we use a lot, is Indonesia. Indonesia is a great market because the price of Bitcoin there is pretty much always higher than the rest of the world. So if I buy a Bitcoin in the UK and then I send it to Indonesia, I actually make money. So I could buy a Bitcoin for $100 and then I could sell it in Indonesia for $102. So you make $2 on that transaction. You actually get more money at the other end. Now, this means that you have negative fees. You have no fees. Negative fees, you actually make money when you send overseas. So that's what we mean by arbitrage, is that all of these different currencies, all of these different countries around the world are quite exciting, because you have the opportunity to be able to buy somewhere lower and then sell somewhere higher in price. What you'll also see is, especially many of the emerging market countries and currencies, there's a lot more demand for cryptocurrency stuff there. So often the price is higher, and that's good for remittances, because often these are the countries of which people are sending money to. So if you can buy Bitcoin in the UK and then sell it in Nigeria and make 2% on that, just by the act of doing that, then that's obviously a great thing for your business as well. So that's some of the things to consider, and maybe you'll have some questions about that. But there's some of the common things that we wanted to talk about. We wanted to talk about protocols in this session, and we wanted to talk about some of the settlement mechanisms. What does settlement mean? And the next session as well, we'll be talking about stablecoins and what they are. And essentially, they're a coin which is pegged to the national currency, but they are on a blockchain. They're on a ledger, but they always hold their value to the national currency. And how does that interact with settlement? And is that an IOU, or is it not? Is it a thing of value like a Bitcoin, or is it not? Who controls it? All these sort of things we'll get into in the next steps. But certainly we need to understand, a lot of these different protocols, and what is a protocol as well, and why are people interested in using it? So happy to open it up to questions from there as well.
Hi, George.
Yeah, sure, go ahead.
For this, can you hear me?
Yep.
Yeah, for the sake of simplicity and to help us visualize the flow, on the diagram that you have on how a cryptocurrency work in remittances, there's a diagram where you have the HKD and PHP. For simplicity, can you let us know where each entity sits on this diagram? So take my client ABC, for example, who is a UK-based MTO, and they are collecting HKD, Hong Kong dollars, here in the UK, and then sending it to Bloom to pay out in PHP. Where would ABC sit in this picture, and where would their agent, their send agent, if any, sit in this diagram as well?
Yeah, so that's a good question. So in this diagram, you've got two entities. You've got the sender side and the recipient side. Now, the sender side is receiving the cash, so that might be a local agent in the UK. Now they are receiving the cash, so now they have cash, and they need to get it to the Philippines. Now,
yeah,
what they usually do is they take that cash to the bank, and then they do a bank transfer to maybe some partner of theirs, and then maybe the partner cashes it out, and they've got to do it in advance, and it takes some time and money and so on. But with the cash in the UK, you can actually deposit the cash in the UK at a location, which could be a physical vault. In the case of what we do, is it's a physical vault, or you can take that cash and you can exchange it, for Bitcoin or some cryptocurrency of value. It could be Ripple, could be Stellar as well. But you are converting that cash into a balance with one of these different companies. So essentially, the cash is collected. If you can see my cursor here, it is converted into some currency. Now, this is done by one of these companies, So you essentially deposit the cash with them. Now, these companies manage the settlement process, and what all they're doing is they are taking your cash, selling, exchanging it for Bitcoin, and then they are taking that Bitcoin and then selling it at the destination, which is, often it's one of these guys as well at the destination. So in the case of Bloom or something like that, the Bitcoin is being sent to Bloom, who live in the Philippines, and they're there in the Philippines. And what Bloom does with that Bitcoin is they then go and exchange it for the local currency. And then you can see here the final step is the cash withdrawal. So the cash physically gets sent to the recipient at the other end. So, the long and the short of it is, what does it mean to a customer in the UK? Well, they deposit money, cash, with an entity, maybe via a vault, a cash pickup. And then that entity that they deposit with will then manage the whole settlement in order to get the money to the Philippines. So as far as the UK is concerned, the company in the UK, all they care about is, has my money got there? And what's the exchange rate? Generally, that's what we see. And that process is managed by one of these settlement companies, whatever they might be. So does that shed some light on it?
Yeah, that's fine. Thank you. So I'll just repeat what I understood. So a lot of attendees here are MTOs, and the way they would work with BitSpark, let's take BitSpark as an example. It's of course a very good example because you're from BitSpark. So now you have a sending destination where you say the second step, going from left to right, the second step is cash is converted to Bitcoin. And the fourth step is Bitcoin is converted to fiat currency. These two steps, they are typically being provided by, in many instances, by the same company like Bloom, BitSpark, Coin.ph, etc. Right? So a UK MTO would partner with, let's say, BitSpark. The UK MTO would have a teller. Customer walks in with cash, gives the cash to the teller. The teller buys Bitcoin on behalf of the customer using BitSpark's interface, and then the Bitcoin is sent to the other side, to the payout side, where BitSpark will pay out cash via Bloom or what have you in PHP, right? That's
exactly,
how it
yeah.
would work. Okay.
Yeah, so the teller just gets an exchange rate and presses a few buttons and attaches the appropriate information to the transaction, and then it's done. So as far as the teller is concerned, they're logging into a system like BitSpark, and they're making a payment. So they're providing the information, who's the sender, who's the receiver, where's it going to, is it going to a bank, and so on. They type all of that. They can click a few buttons and put that information in, and then press a button, and then it just gets sent. And all of this converting and Bitcoin and stuff like that, that is managed by a company like us. Yeah.
Right. So it's very straightforward. I mean, there's no complications. As we, the audience, can see here, the process is quite straightforward. We have to sign an agreement with a partner like BitSpark, and then just off we go. No need to worry about any bank account issues, etc. As you clearly demonstrated and explained, it's just a matter of just buying Bitcoin, sending them across, and paying out. From the customer's perspective, and by customer I mean the actual remitter, the person who's coming with cash to the MTO's office, that person doesn't really care. From his perspective or her perspective, he or she is just basically sending PHP, paying out PHP in Philippines, in this example.
Yes, exactly. Yeah. So the customer, it's owned by you as the MTO. You're the one who has the agent, the cash. The customer's visiting you. They know you.
Exactly.
So that relationship is owned by the MTO. So the customer doesn't care. He puts his money in, and he just wants to get it there the quickest, fastest, cheapest way. BitSpark is one of the that can provide that whole process for that agent. So we also another point as well is some agents, they have their own API, or they have their own system that they've built over many years, and it's also possible to connect the BitSpark system via an API to maybe that agent's existing system. So some agents have a larger network, and that can also be done as well. So it can be done by a teller that's in front of a computer, but it can also be done via an API as well.
Great. George, for the benefit of my audience here, again, can you please shed some light on data? You see, my clients who are MTOs, they work very hard to build their customer base. They've got details on all the remitters, the individuals, their data. And now, when these MTOs work with BitSpark, how is that data handled? And because you have that, do you have access to that data? And of course, if you do, it's going to be encrypted. So how is that data handled? How can my customer or my client, feel rest assured that their data is not being tampered with or misused?
Yeah, so every piece of data that enters or exits that's our system is encrypted all along the way, and when we're doing this transaction as well, the Bitcoin here and then the Bitcoin conversion over here, there is no data which is associated with you on the blockchain for everybody to see. So you may have seen up here that everybody is sharing this common ledger. So you might think, well, does that mean that everybody can see my data? No, that is not the case, because actually what people can see is it's all encrypted. So what that means is it's just a jumble of numbers and letters which mean nothing to anybody that's looking at it. Only you know what that data is. So when we're doing a transaction, there's nothing saying John Smith is making a transaction to whoever's at the other end or whatever. That is not on the blockchain. It's all encrypted. Everything in our system is also encrypted. So any information which you share with us, is end-to-end encrypted as well. And that is like, you would have probably seen, on the different news articles or whatever about hacking and cybersecurity and so on. But generally, crypto companies are held to a higher level because we use a digital currency, right? We have this online thing which is worth value. Like it's a Bitcoin exists on the internet. It has a value. That means that you've got to be very very secure in what you're doing, because if you're not, you could get hacked or something like that. But we take a lot of precautions in order to ensure that never happens, and that's never happened to a company like us or anybody that I've spoken about today. So a lot of the crypto companies are held to a much higher standard than companies which are perhaps not engaging in that sort of thing. But the main thing is that the data. Another key point as well is that if you are saying that the customer needs to pay out to bank account number XYZ, then clearly we need that data in order to make the payment to bank account XYZ. So that information does ultimately get and is part of the transaction. It gets to the other side, but the handling of that data is a secure process.
Great. Thank you very much, George, for the explanation. Thank you.
I think there's quite a few different things that we've touched on today, but I think the main thing we wanted to talk about was protocols. What's the difference between sending an IOU and sending something which has a value, and that's a very important concept to get as we move forward to the rest of the webinar series. So yeah, I hope that I've been able to shed some light on that today.
Hi, George. Yes, it's Osama here. George, you spoke earlier about regulations, international regulations a little bit. Can you just give us, for my own sake as well, and the audience, a little bit more information about what kind of regulations are out there at the moment? I know it's kind of new. There's not much out there at the moment. Is there anything in particular that's going to stop people maybe from using the service in particular areas? Maybe I know South Korea, I think quite recently, not so long ago, they had a few issues with it. So just a bit more information from yourself about some of the regulations out there, just for us to get a better understanding about what is going on, George.
Yeah, I mean, that's a good question, and it comes up quite often because obviously it's a very important thing. So how it's treated in the different countries, as I said, depends on the national regulator. But the good thing is that most of the remittance countries have a pretty clear stance about it. So when you look at the top 10 countries that people send money to, pretty much, most of them now have some sort of, regulatory guidance on, blockchain-based cryptocurrency transfers and so on. So in the case of the Philippines, that's an example where there is a license, a specific license for cryptocurrency Bitcoin transactions. In the case of Mexico, I think the regulator there has made it a part of the existing money transfer license. I'd need to double check on that, but I'm pretty sure that's the case there as well. In the case of elsewhere in Asia, Japan, Korea, again, there is a specific license for it. In other countries, like say Singapore, it is integrated into the existing license. So as long as you have a money transfer license, you're fine. The regulator doesn't really mind. And then you have the sender countries as well, UK, US, Australia. Again, US is another one where it's integrated into an existing money transfer license. So if you already have a money transfer license, that's fine. That you're covered. So so you just do everything as per normal in terms of what you have to do for your license. In the case of other countries, many of them don't really have any specific regulatory guidance. So Hong Kong's an example.
And that's just your usual regular money transfer operating license. It's not an e-money license because obviously you're not holding client funds indefinitely or anything like that. Am I correct in saying, George? It's just your regular money transfer operating license that you need to hold with the regulator to then be able to use the service.
That is correct. It's a regular money transfer license because you are not holding money on account for somebody. You're transacting instantly somewhere, so it's gone. The money comes in and then it goes. And usually with e-money licenses, it's are you holding money on somebody's behalf? Are you a deposit taker institution? That is not the case for this because you are on a transactional level. You're just transacting. Money goes in and then it goes out. So it just comes under the existing money transfer licenses. And other places around the world, we mentioned Nigeria, Uganda, I think South Africa as well. There's no specific regulation on cryptocurrency. In fact, the central bank has said, this is something which we don't regulate, because what does a central bank do? Well, they regulate monetary policy for their currency. And Bitcoin is obviously not their currency, so it does not come within the regulatory purview of many of the regulators. So the majority of countries around the world go down this path, and they say, look, this is not something we regulate, therefore we have no opinion on it. If you buy a can of Coke, in many countries it's considered the same as buying a Bitcoin. It is a commodity, a product, and that is how it's treated regulatory wise. It is not seen as a currency, because if it was seen as a currency, it might come under FX laws and that sort of thing. But I'm not aware of many countries at all really that have classified as an actual currency, because that would be make it treated differently.
Brilliant. Thank you so much for that, George. That's really cleared things up.
No worries. If there's any more questions, definitely let us know. Yeah, I hope it was a good presentation. Is there anything else you wanted to add, Osama or Aimer?
Not from my end. As Osama speaking off my end, that was fantastic. And as I just mentioned, I think especially cryptocurrency, it is quite new to a lot of us, and I think it's been very beneficial to us to really get a better understanding and take those fears away and understand what we're looking at in regards to crypto.
Yeah, absolutely. No, it's something that does require education, and that's essentially the purpose of the webinars, is to really sort of get out there and what does it actually mean, and to give you some examples. Like today we're getting some examples practically about how it works, and the different real companies that have been around for years doing it. This is something that we certainly want to get the word out as well. And so that's really sort of education is really the key point in these sessions. So I think we might sort of leave it at that if there's no more questions. But but yeah, you know, it's been a great seminar with everyone today. You know, certainly, you know, get in contact with RemitONE or ourselves. You know, we're happy to discuss and sort of see if you're interested in this sort of thing, how it might be relevant to you. Then, you know, certainly get in touch. You know, let us know your specific you know, interest area, and we'll be happy to assist.
Brilliant. Thanks, Jules. Thank you very much.
Okay, thanks guys. Have a great evening.
Cheers. Take care. Bye. Bye.
Take care. Bye.
See ya.